If you're 65 or older, the IRS just handed you a $6,000 tax break that you've probably never heard of. And here's the crazy part: most tax professionals aren't even talking about it yet. This is brand new for 2025, and if you don't claim it, you're literally leaving thousands of dollars on the table. By the end of this video, you'll know exactly how to get this money back, who qualifies, and what you need to do before the next tax season. Let's dive in. Section 1. The Game-Changing Tax Break. In July 2025, Congress passed something called the One Big Beautiful Bill Act, and buried in that legislation was a tax provision that could save you thousands of dollars every single year through 2028. It's called the Senior Bonus Deduction, and it's one of the most generous tax breaks for seniors in recent memory. Here's what it is in simple terms. If you're 65 or older, you can now claim an additional $6,000 tax deduction on top of the standard deduction you already get. Now I know what you're thinking. What's the difference between a deduction and a tax break? Let me explain, because this matters. A deduction reduces your taxable income. So if you earned $80,000 last year and you claim the standard deduction of around $30,000, your taxable income drops to $50,000. Now, with this new senior bonus deduction, you can reduce your taxable income by an additional $6,000. That means your taxable income would drop to $44,000 instead of $50,000. The lower your taxable income, the less you owe in taxes. If you're in the 22% tax bracket, that $6,000 deduction could save you around $1,320 in federal income taxes. And that's just the federal level. Some states offer additional tax breaks for seniors too. But here's where it gets even better. If you're married and both you and your spouse are 65 or older, you can each claim the $6,000 deduction. That's $12,000 in combined deductions, which could save a married couple over $2,600 in taxes. This is real money. This is money that you've already earned, and the government is essentially saying, we're going to let you keep more of it. And yet, most people don't even know this exists. If you're serious about understanding tax breaks and strategies that could save you thousands of dollars in retirement, hit that subscribe button. Next week, I'm covering how to protect your retirement assets during a divorce after 50. It's a topic that affects millions of people, and most of them don't know how to navigate it. Subscribe so you don't miss it. Section 2. Who qualifies? Now, before you get too excited, let's talk about who actually qualifies for this deduction. The rules are pretty straightforward, but there are some important details you need to know. First, you must be 65 years old or older by the last day of the tax year. So if you're turning 65 in 2025, you qualify for the 2025 tax year. If you're already 65, you definitely qualify. Second, you need to actually claim this deduction on your tax return. It doesn't happen automatically. The IRS isn't going to call you up and say, hey, you qualify for this. You have to know about it and you have to claim it. This is why I'm making this video, because so many people don't know about it. Third, there's an income phase-out. If your modified adjusted gross income, or MAGI, as tax professionals call it, exceeds $75,000 as a single filer, the deduction starts to phase out. For married couples filing jointly, the phase-out begins at $150,000. Now, what does phase-out mean? It means the deduction doesn't disappear completely if you're over that threshold. Instead, it gradually reduces. So if you're a single filer earning $80,000, you don't lose the entire $6,000 deduction. Part of it phases out, but you'll still get some benefit. Let me give you some examples to make this crystal clear. Example 1. Single filer, age 67, MAGI of $60,000. You qualify for the full $6,000 deduction because you're under the $75,000 threshold. Example 2. Married couple, both age 70. Combined MAGI of $140,000. You both qualify for the full deduction because you're under the $150,000 threshold. That's $12,000 in combined deductions. Example 3. Single filer, age 72, MAGI of $85,000, you're $10,000 over the threshold. The deduction phases out, so you'll get a reduced amount, not the full $6,000. Example 4. Married couple, both age 65, combined MAGI of $160,000, you're $10,000 over the threshold. Your combined deduction will be reduced, but you'll still get most of the benefit. The bottom line, if your income is close to or below the threshold, you almost certainly qualify for the full deduction. Even if you're over the threshold, you likely still get a significant benefit. Section 3. How this works with your other deductions. Here's something that confuses a lot of people. How does this new $6,000 deduction work with the standard deduction and the other senior deduction you already get? Let me break this down because it's important. For 2025, the standard deduction for a single filer who is 65 or older is approximately $30,000. This is the amount that the IRS lets you deduct from your income before calculating taxes. If you're married and both spouses are 65 or older, the standard deduction is approximately $38,000. Now, on top of that, seniors already get an additional deduction. For a single filer, that's an extra $2,050. For married couples, it's $1,650 per person. Now, with the new law, you add the $6,000 bonus deduction on top of everything else. Standard deduction, $30,000 additional senior deduction, $2,050, new senior bonus. Deduction, $6,000, new total, $38,050. That's an extra $6,000 in deductions compared to what you could claim before. And remember, each $6,000 in deductions could save you around $1,320 in federal taxes if you're in the 22% bracket. The key thing to understand is that this is stackable. You get the standard deduction, you get the additional senior deduction, and you get this new $6,000 bonus deduction. They all work together to reduce your taxable income. Section 4. When does this expire? I want to be very clear about something. This is not a permanent tax break. The law that created this deduction is set to expire after 2028, so this bonus deduction is available for 2025, 2026, 2027, 2028. After 2028, unless Congress extends it, this deduction goes away. This is really important because it means you need to take advantage of it while you can. You have 4 years to claim this deduction. After that, it's gone. Now, will Congress extend it? Maybe. Tax breaks for seniors are generally popular, so there's a decent chance it could be extended, but you can't count on that. You need to plan as if this is your only opportunity. This is actually a common strategy in Congress. They pass tax breaks with expiration dates to make the legislation look cheaper on paper. But it also means that people like you need to be aware of these deadlines and take action. Here's a question for you. Have you already heard about this $6,000 senior deduction? Or is this the first time you're learning about it? Drop a comment below and let me know. I'm curious how many people in my audience already know about this, and how many are just discovering it now. Your comments help me understand what topics are most important to you. Section 5. How to claim this deduction. Okay, so now you know what this deduction is, who qualifies, and how much you could save. The next question is, how do you actually claim it? The good news is that claiming this deduction is straightforward. You don't need to do anything special or complicated. Here's the process. Step 1. Gather your information. You'll need your Social Security number and your spouse's Social Security number if you're married filing jointly. You'll also need to know your modified adjusted gross income, MAGI, for the year. Your MAGI is basically your income from all sources wages, Social Security, investment income, retirement distributions, etc. When you file your 2025 tax return, whether you do it yourself, use tax software, or work with a tax professional, you'll claim this deduction just like you claim the standard deduction. It's part of the standard deduction calculation. If you're using tax software like TurboTax, H&R Block, or TaxAct, the software should automatically prompt you to claim this deduction if you're eligible. Just answer the questions about your age and income, and the software will handle the rest. If you're working with a tax professional, CPA, or tax preparer, make sure you tell them about this deduction. Some tax professionals might not be aware of it yet, so it's worth mentioning. You can even show them this video if you want. Step 3. Include your Social Security number. Here's an important detail. You must include your Social Security number on your tax return to claim this deduction. If you're married filing jointly, both spouses' Social Security numbers must be on the return. This is how the IRS tracks who's claiming the deduction. Step 4. File jointly if married. If you're married, you must file jointly to claim this deduction. You can't claim it if you file separately. This is an important rule to remember. Section 6. Real-world examples. Let me walk you through some real-world examples, so you can see how much this deduction could actually save you. Example 1. Single retiree, age 70. Let's say you're a single retiree, age 70, with the following income: Social Security, $25,000, pension, $30,000, investment income, $10,000, total income, $65,000. Your Magi is $65,000, which is below the $75,000 threshold, so you qualify for the full $6,000 deduction. Your tax calculation: total income, $65,000, standard deduction, $30,000, additional senior deduction, $2,050, new senior bonus deduction, $6,000, total deductions, $38,050, taxable income, $26,950. Without the new deduction, your taxable income would have been $32,950. The $6,000 deduction saves you approximately $1,320 in federal taxes, assuming a 22% tax bracket. Example 2. Married couple, both age 68. Now let's say you're a married couple, both age 68, with the following income: combined Social Security, $50,000, combined pension, $60,000, combined investment income, $20,000, total income, $130,000. Your combined MAGI is $130,000, which is below the $150,000 threshold, so you both qualify for the full deduction. Your tax calculation: total income, $130,000, standard deduction, $38,000, additional senior deductions, $3,300, both spouses, new senior bonus deductions, $12,000, both spouses, total deductions, $53,300, taxable income, $76,700. Without the new deduction, your taxable income would have been $88,700. The $12,000 in combined deductions saves you approximately $2,640 in federal taxes, assuming a 22% tax bracket. Example 3. Single retiree, age 72, over the threshold. Let's say you're a single retiree, age 72, with the following income: Social Security, $30,000, pension, $40,000, investment income, $20,000, total income, $90,000. Your Magi is $90,000, which is $15,000 over the $75,000 threshold, so your deduction will phase out. The phase out is gradual, so you'll still get most of the benefit. In this case, you might get a reduced deduction of around $4,000 instead of the full $6,000. Your tax calculation: total income, $90,000, standard deduction, $30,000, additional senior deduction, $2,050, new senior bonus deduction, phased out, $4,000, total deductions, $36,050, taxable income, $53,950. Section 7. Important details you need to know. Before you go off and claim this deduction, there are a few important details you need to be aware of. First, this is a federal deduction only. It reduces your federal income taxes, but it doesn't automatically reduce your state income taxes. Some states might offer their own senior tax breaks, but you'll need to check with your state's tax authority to see if you qualify for those. Second, this deduction is available for 2025 through 2028 only. After 2028, unless Congress extends it, it goes away. So if you're planning your retirement income, you should factor in that this deduction will expire. Third, you need to claim it on your tax return. It doesn't happen automatically. If you don't claim it, you don't get it. This is why it's so important to work with a tax professional who knows about this deduction, or to use tax software that will prompt you to claim it. Fourth, if you're married, you must file jointly to claim this deduction. You can't claim it if you file separately. This is an important rule to remember. Fifth, the phase-out can be complicated if your income is close to the threshold. If you're near the $75,000 single or $150,000 married threshold, you might want to consult with a tax professional to calculate exactly how much of the deduction you qualify for. Section 8. How this fits into your overall tax strategy. Now, I want to put this in a bigger context. This $6,000 deduction is just one piece of your overall tax strategy as a retiree. There are other strategies you should be thinking about too. For example, If you're taking distributions from your IRA or 401k, you might want to consider Roth conversions. If you have significant investment income, you might want to think about tax loss harvesting. If you're still working, you might want to maximize your catch-up contributions to retirement accounts. But the point is, this $6,000 deduction is a straightforward, easy way to reduce your taxes. It doesn't require any complicated strategies or investment decisions. You just claim it on your tax return and you save money. I'm not a certified financial advisor, and I'm not giving you personalized financial advice. I'm sharing what I've learned through my own legacy planning journey. For advice specific to your situation, you should consult with a qualified tax professional or financial advisor. Before you go, I want to ask you one more thing. Are you currently working with a tax professional, or are you filing your taxes on your own? If you're filing on your own, make sure you use tax software that will help you claim this deduction. If you're working with a tax professional, make sure you mention this deduction to them. Don't assume they already know about it. And if you found this video helpful, please give it a thumbs up. It helps the algorithm show this video to more people who could benefit from this information. Thanks for watching, and I'll see you in the next video.